Okay.
Recording.
Just hold on. Let me check. I'm hearing myself. I don't know what. Can you see my screen?
Yeah, I can see.
Okay. So last week, can you mute yourself? Mute yourself. I think when you mute yourself, I will not hear myself again. I don't know what's in this thing. Happening. So this was our analysis for last week. I think on this one. Yeah, this was our analysis last week. So I think this was our analysis last week. So this was our analysis last week on US30. So we predicted that the market is going to come to our 50% FIB level, then push us up, right? So what did the market do last week? It touched the 38% at this level. It touched the 38% at this level. Then it gets to 52,700, then push down again. But what did the market did here is it's just that the market did not really get to 50%. It created a wick. It got to 38% and created a wick. So therefore, the market did not get our entry. So I did not take this trade last week. We did not take any trade last week. Right? So on Friday, the market started dropping massively. The market dropped massively on Friday, Thursday and Friday. Right? Until you get to the 38% FIB level, then it still pushed up at the 38% FIB level. Right? So let's say for probably 3 to 4 weeks now, the market has not been getting to our entry. Yeah, the market has not been getting to our entry. Even though that last week, the last analysis that we did, I said I give 2 entries. I gave 2 entries. The market didn't get there. It was just pushing up. So we are still going to do our top-down analysis for this week. we are not changing anything because we know that definitely the market is still going to start pushing the way it usually push to get to our entry. So we are not doing anything much, just the same strategy, the same analysis, the same confluence we keep putting on until we start seeing a good entry. But for now, we'll still have to maintain our strategy, right? Yeah. It's better we didn't trade than we trade and we lose money. It's better we didn't trade at all than we trade and lose money, right? So it is very, very important to take note of it. So what we are going to do now is we are going to do analysis again for the week. Then we'll see what's going to happen in the market for this week. US30 has been pushing up and down. Though if you are trading from 5 minutes, you'll be catching entry. Well, if you are doing a swing trade, mostly for those of us that work, it is the market has not really given us a better entry. It has not really come to our entry, right? So the best thing to do is still exercise patience for those of us that are working. But if you want to catch entry, you analyze the market, the same procedure, the same way that will do our analysis. But just that you start from 1 hour. If you want to catch like 200 pips, if you want to catch 200 pips, you can analyze from 1 hour, 30 minutes, then take your entry on 5 minutes. Well, US30 is very, very volatile. You have to understand how the market moves, right? You have to understand how the market moves. Well, first of all, I'm going to do the analysis for us and show you guys how to go about it. But our major weekly outlook is based on higher time frame. Our major weekly outlook is on higher time frame. Why am I making it like this? Is because so that will not go off track. Because for the past some weeks, the market has not been getting to our entry and like to give us what we want. Yeah, especially this month and last month, it has not really been getting to our entry. But notwithstanding, we're still going to keep to our strategy and maintain what we have been doing because it has been working, right? So that we will not go and deviate to maybe start incurring losses, right? So that is why I said we are going to do our analysis, our normal analysis on from monthly to 4 hours, and we're still going to do from 1 hour, let's say 4 hours, 1 hour and 5 minutes for entry. So if you see entry on 5 minutes, once the market come, you can enter. You catch 200 pips. Highest 200 pips. 1:2. Risk to reward. 1:2. You are out of the market, right? Once you see it, you can catch. But our major entry level will be from our normal outflow, from monthly, weekly, daily, and 4 hours. Then when you see an entry on 1 hour, you enter. I hope that makes sense, right? Because initially I told you guys I'll be dropping trades like 200 pips, 100 pips sometimes, but because of sometimes when I analyze the time factor before I could finish what I'm doing and drop it, it has already moved because US state is very, very fast. And I can't tell you, okay, enter immediately because I have to see confirmation, right? So that is it. Do we have any question? Do you have anything regarding the market this week? before we proceed with our analysis. Mrs. Margaret, you're welcome. Just saying.
Thank you, sir. Good afternoon. Sorry I'm late. Sorry I was
Um,
late.
no problem.
No, nothing really. Just that I should have been patient. I got caught out. I should have been patient. So I caught the end of what you were saying about we need to be patient, else we'll incur losses, and you're so right.
Mm,
So this week I'm just gonna wait. I'm just gonna wait.
yeah, the trading is all about waiting. It's all about patience. Yeah, because me, I've
Yes,
been
sir.
trying to like on 5 minutes. I do get entry. I do get entry, but it has to be a quick one. I do mostly scalping. I've not gotten a swing trade because the market has not really gotten to our entry. So what I do most times is scalp. Because if you
Okay,
watch,
sir.
if you go on 5 minutes, New York section, New York Open, the markets usually have a fast move within the period of 30 minutes, 30 minutes to 1 hour. It moves fast. So if you analyze the market and know what you're doing, you can catch up to 200 pips. Then you're cool, right? But if you don't understand what you're doing, if you don't really know how the market moves, the US30 moves, it can hit you out. So if you analyze, we are still gonna do it here. If you analyze 1 hour, 30 minutes, 1 hour, 30 minutes, 5 minutes, then you can enter. New York section is the market come to your entry. That is how you analyze it
Okay, sir.
before the market open,
Okay, sir.
right? So,
Okay.
but our normal weekly outlook is standby. That is where we can swing,
Okay, sir.
we can hold the trade. But this one we are going to do
Okay, sir.
is going to be catching 200 pips, 100 pips, and you're out of the market.
Okay, sir. Thank
Yeah, very well. So that is it. So we are going to do our top-down analysis now, so that we'll still wait and see what's going to happen. I'm going to clear this. I'm going to clear this. I'm going to clear this now. So I hope you guys can see my screen, right? I was actually expecting this market. I was actually expecting US30. Where I think that US30 will have to start falling is
Yes, sir, we can.
from 53, 500. I think that's one of my analysis I did on weekly tops. Where I think that US30 will start dropping is from yeah. Can you guys hear me?
Yes,
Can you
sir.
guys
Yeah,
Yes,
we
sir.
can hear. We can hear.
Okay. Sorry, my network just dropped. So what I was saying before is that what where I was expecting US30 to start dropping was at 53, 500. If you check 53, 500, this is where I was expecting it to start dropping. At this particular range, this particular place. Let me erase this. That's why I was expecting it to at least get to 53, 500 before it will touch this 61%. This is my analysis on weekly. It's just standby, it's just there. I don't touch it. This is where I can take a long trade, a long swing trade. So you just stand by here. So I expected it, where I expected it to start to have a retrace, a massive retrace was at 53, 500. Well, it didn't get to there. Then it started dropping. Well, anyways, we're still on track. We're still on track. In as much as we are not incurring any losses. If you are following our analysis, yeah. So we are going to do our weekly outlook. Then we'll do after we have done the weekly outlook. Then we'll do the normal. I will now show you guys how to analyze US30 on a daily basis. If you want to be catching 200 pips, because for the past 1 month or so, the market has not been coming to our entry. It's not that we have had any loss, just that the market has not been coming to our entry, right? So I will show you guys how to analyze on a daily, so that maybe when the market 30 minutes before the market open, you can analyze the market from 1 hour, 30 minutes, 5 minutes, then you catch your entry. You catch your entry on 5 minutes with the same confidence that we are using. But it has to be a quick one, because immediately the New York session opens, the market is always massive. It's very, very volatile. So you need to be extremely careful. It has to be a scalping method. I will show you guys how to go about it. Right? So, but first of all, we'll do our weekly outlook. Then after that, we can now proceed. How would that make sense?
Yeah.
Yes, sir.
So this is our monthly. As you guys can see, our monthly, this is the highest level that the market has gotten to. The highest level, the highest high, the highest high. Then this is I'll take this as our low. The low. I'll take this as our low because the market has already broken this level, retraced and pushed up. I'll take this as our low. So move down to our weekly. Move down to our weekly. So there is not really much things to do here. Let's go down to daily. Let's see the clear view. So looking at the daily, you see there's a clear view. So this is I'm seeing a key zone here. There is a key zone there, and there is psychological level here. Key zone and psychological level here, and there is 2 touches there. So more than 2 touches. There is key zone here. There is psychological level here. Take note of that. Right? So now we'll move down to our 4 hours. Well, first of all, let me bring down our Fibonacci and see the direction of the markets and see what's happening. Okay. Even looking at this, the market has not even really gotten to the 61% fib level. Okay, very good. So you're still expecting the market to pull off. So let's go down to our 4 hours. Our 4 hours. I didn't bring our trend line. Remember, this is our trend line. It's still valid. This trend line is still valid. The trend line is still valid. All right. So now, what are we going to be looking at? What are we going to be looking at? The market is trying to show us that it wants to go more down. It wants to fall. But until the market breaks this support level, this is a new support level. Until the market breaks this support level and retrace, you know that the market is coming here next. But if the market could not break it, we'll still have a buying opportunity. We'll still have a buying opportunity. So I will draw my fib level from here, from this level to this level. We'll see. Even at 4 hours, the market has not really gotten to the 61% fib level. And it pushed down. It couldn't break this 27% and it pushed down. So that is to say that the sellers are refusing the markets to push up at the resistance level. So if the market can break the trend line, break this support level, then we are expecting it to come to the 50% fib level before we start looking for a buy. Does that make sense? Because looking at the market now, the market didn't break the 27 fib level. It has many touches. Mind you, this is 4 hours. 1, 2, 3, 4, 5. It came to the 27% fib level 4 times and couldn't break above. It couldn't break above it. Right? Then on Friday, it started dropping. And when it gets here, when it gets to the support level, it couldn't break the support level. So technically, the market is just within this range. The market is just within this range. Right? So until the market pushed up from this level, we'll still expect a buy to 51 to 61%. To 61%. Or another second entry that we expect is that the market should get here, get to this 38% to 50% fib level, then take us up. But notwithstanding, we are still looking for a buy. We are still looking for a buy. Does that make sense? Do you have any question? Do you have any contribution? Because looking at the market here, it has just been ranging from up to this place, to this range, 127 to the key zone, 127 to key zone, just within this range. It has not broken above. So this is what we'll still be expecting. But if the market can break here, but if you can trade the drop, How will you trade the drop? Once it breaks here and give you a retracement, you can, excuse me, guys. So, sorry, guys. So now, if the market can break this level, we can trade a retracement to the 50 or 38. Once you get to 38, you can trade it to the 38%. Once you get to 38%, you can close at 51,300. And please, whenever you are trading, always consider the psychological level. Even if you want to trade, once you get to a psychological level, close. If you catch 100 pips or you break even. I don't know if you guys understand what I'm saying. Once you get to the psychological level, you guys know what psychological level, right? Once you get to your psychological level, you close, especially when you are trading against the trend. But it's not advisable. But if you want to trade, it, once the market break out from here, give you this sign. That means you can trade to 38% fib level. Then you close. Then you see the reaction within this range. If the market is going to go more down or is going to go up from here. But this is the major place, major entry. This is our major entry. If the market can get to the 50% fib level, it's going to be a good one. Then we'll ride it up. It's about 2,550 pips. So let's check the calendar and see. Let's check if there is news this week. Oh my goodness. There is no news this week. Oh. Are you serious? Wait. Today is what? 19. Then we don't have any news this week. So we'll see what's gonna happen. We don't have any news this week. Yeah, we don't have any news this week. So definitely the market might definitely fall to this 50% fib level. Because I don't really see what's going to push the market unless if Trump tweet anything or say anything, you get. So until then, so this is going to be our weekly outlook. This is going to be our weekly outlook. Let me copy it and paste in the code. So do we have any question? Do we have any question regarding the analysis? Hello, guys.
No, nothing from me. Nothing from me.
Do you have any question?
No question, boss.
Okay. So let me quickly show you guys how to go about the daily analysis. I'm going to clean this up. I'm going to clean it up. So now, if you want to analyze on a daily from 1 hour, from 1 hour. From 1 hour, you're going to be looking at the highs and lows. From 1 hour, now this is the highest high. This is the highest high. This is a low. This is a low. Are you guys seeing what I'm doing? This is the low. This is for those of us that want to be catching 200 pips every day, right? 200 pips every day. Now, this is a recent low, recent high, I mean. So now, you want to catch a trade. So what will you now do is, if this market, normally you have to know if the market is actually on 1 hour, if it's going down, if it's selling or is buying on 1 hour. So apparently now this market is trending down. So what do you do? From your Fibonacci, you drag it from here. This is your sell. You drag it from here to this level, right? So you see that now the market is reacting at the 61% fib level and could not break the 61% fib level at that particular high. And the New York session has opened. Let's say, for instance, the New York session has opened, right? So you know that this market now is apparently going down, dropping. So until this market breaks this level, give you retracement like this, then you trade to this 100%. Are you guys getting what I'm saying? Are you guys getting what I'm saying? Does that make sense? Or should I
So do
come
you
again?
do, sorry, sir. Come again, please. Come again, please.
Okay. What I said is, first of all, on 1 hour, you have to mark out your highs and your lows, recent high and recent low on 1 hour. And you are expecting, you want to trade New York session, you want to catch 200 pips. So when you have marked out, first of all, you have to check the market structure on 1 hour. What is the market doing for the past 1 hour? If the market is going down, if it's selling, if the sellers are in the market, you have to use your Fibonacci to get the 50 to 61% fib level at that particular instant where the market is. So if you, like now, I have drawn this Fibonacci and I'm seeing that, okay, at this particular zone, the market has refused to break it. We have, from 1 hour, we have 6 touches or more than 1, 2, 3, 4, 5, 6 touches here. And we are in New York, we are already in New York session, and the market should pull up to this level. If the market should pull up to this level and could not break this level, that means you can sell this market up to this level again. Up to this level, 52,100. That is how to trade it. But before you sell to this level, you make sure that the market has grabbed liquidity. The market has grabbed liquidity. It has to, like, if the market wants to push up, it will do like this and come down. You make sure that the market has grabbed liquidity before you enter, so that you will not be the liquidity. right? Like this one that happened, this is 50% fib level. The market grab liquidity, do as if it wants to push up, then drop down. That is why when you go to, after you've done your analysis, you go to 5 minutes. You go to 5 minutes, you see what the market did here. You see what the market did. You see what the market did. Touched a 61% fib level and couldn't break out. So now what do? If you want to trade this at New York section, let me bring the indicator. Let me show you guys. This is New York session. Once New York session open, you see what happened? The market moved up. Remember, you've already seen that this market is trending down. And you have to make sure that it is you have to have like 4 confirmation that the market has already tried to break this is one and couldn't. That is why you can say, okay, you can comfortably enter and catch 200 pips from this level. If it's buy or sell, you can catch a sell position 200 pips and you're out to this level. This is what I do on a daily basis. I don't know if that makes sense. I don't know if that makes sense. And when the market comes here, if you still, when the market comes here, seems it's not necessarily that you will trade the sell. Based on the fact that the market is trending up. So what you do, if you have seen the rejections at the support level, you can wait for the market to come here, grab liquidity, then you enter. When it gets to the 38% fib level, or if you catch 200 pips, you close. Either way around. So on 5 minutes, you can sell and you can buy. But it's just for you to know when to sell and when to buy. That is why I said before the market opens on 1 hour, mark out your highs and your lows. Bring your Fibonacci. Check where the market has rejected more than 3 times. Mark out the zone. So if the market comes there, give you liquidity, grab liquidity, you know that the market is about to push down. This is how I trade it. The same thing with the buy. But you can decide that, okay, I don't want to go against the trend. You wait until the market comes to the low, to the support level. You can enter. Wait for the market to grab liquidity, because US30 usually grab liquidity on New York session. You usually want to grab liquidity. Like this thing I'm showing you guys now. See, it grabbed liquidity here and created the wick before it start pushing up. It usually wants to grab liquidity. So if you are not careful,